Monday night call just to talk a little bit about the market and what we're seeing. Open any questions. Obviously, I hope all of you did your homework for our Wednesday call, which we'll do at 8 o'clock. So tonight we'll just go 30 minutes, talk a little bit about the market, look at what the market's doing. We continue to appear to be in a bullish direction. Also, what's kind of curious, it's not that curious, but I mean, it's kind of amazing that you're looking at the S&P 500. Okay, so this is the overall market that we're looking at, but there's also the Nasdaq, which the ETF for that is the Qs. And what's interesting about the Qs, which is the Nasdaq basically, is that when we look at the chart, and this is where the market was at an all-time high. This is when it started to crash because of coronavirus. Came here, but you can see that it's actually climbed all the way up, and it's actually almost to its all-time high. It's up for the year, which is amazing. Now the Nasdaq has companies like Amazon and Netflix. It's mostly technical. There's some medical in there. So it's actually doing better than the S&P 500 and the Russell 2000. The Russell 2000 represents small cap, 2,000 of the best small cap, I guess. The S&P 500 is the best 500 companies, that actually produce earnings. And the Nasdaq was created for tech, represents mostly tech, but there's a lot of other things in there. So you can see that it's performed a lot better than the S&P 500. And again, it's almost at its all-time highs. Now, this is in the midst of, record unemployment. They're just starting to open up the cities around the U.S. So it'll be really interesting to see what happens when things get opened again, because a lot of this is moved up because of, this is technology and things like Amazon that are benefiting from coronavirus because more people are ordering online. Companies like, I believe Zoom is also in the Nasdaq. So companies that are benefiting from the people being at home. We'll see what happens when everything gets opened up again. But it's amazing that, and again, this is bull market, right? It doesn't matter. Good news is good news, and bad news is still good news, right? Because bad news for the market, if you look at the S&P, bad news for the market is really still considered good news, because if it gets bad, the Federal Reserve and the Treasury and the government are saying we're going to back everybody up. So nobody's really scared, about the market or them taking action, because they've been told that they're going to continue to take action to recover the market. So seeing this rise with the record unemployment is pretty amazing. It's phenomenal. But this is the symptom of a bull market. Bull markets go up. Basically, no matter what. This is the sentiment. But you can see the difference between the S&P 500 and the Nasdaq. But this still has a ways to go. But still, the fact that the country's still pretty much shut down, the world's still suffering from it, and to see it rise from here to here, it's just phenomenal. And this is what bull markets do. So, even though they had horrible unemployment numbers every week, the last 4 weeks, 5 weeks, it continues to rise. It's the insanity in the market, right? So it's good to understand. I think we talked about this, to first identify, what the market's doing. Is it bullish or bearish? And then pick your stocks, and then pick your trade. But to go against the market, the overall market, it can be difficult. So if you're trying to short right now, or you're trying to go things to the downside, and there's stocks that are going down for sure. But it's a much more difficult thing to do, because you're going against the overall market. And that's why it's important, I think, to first identify, what's the dominant direction of the market. Does anybody want to look at a stock or have any questions? Not all at once. Anybody seeing anything? Anybody noticing anything? Anybody watching the CNBC or the news about the market? You guys can still hear me, right? Yes? Okay. Well, United Airlines. Okay, UAL. Okay. I used to trade that at a lot, actually. So this is an airlines, United Airlines. Let's see here. Okay, so this is United Airlines. You can see that the airlines went really down hard. They bounced. In here, they were talking about getting money from the government. So they kind of went up a little bit, but then they continued to trail down. So this is clearly going downward. But there is some consolidation. It'll be tough to say where it goes from here or how long it's going to go sideways before it goes up. But you can see that it's lost a huge amount. We're talking around the 90 range, and now sitting at 24. So it's huge. So this particular stock, if you're gonna so as an example, so I know we're in a bullish market. This is an airline. It's going down. If I wanted to trade this, I probably would look at long-term options. A year from now or 2 years from now, and see what they look like. I might do, if I wanted to take this, I might do a covered call on it, because the market is still going up, and this looks like it's bottoming out, so it's a sideways move. I don't like that it's going down, but it's a bull market, so a covered call would be something that I would consider, and or something long-term in the way of options. So if we looked at, as an example, let me see. So if we looked at the options, we'll just turn this around. Okay, so options change. Okay, so we look at the option change, and like I said, I'd probably be looking at something more long term. Let's get that on the other side. Okay. So if we go UAL, United Airlines. Okay, so I might look on. I would look at. Let's see where this goes here. Okay, so some of you have never seen this before, so don't worry about it. We'll get to it. Those of you have. I'm just looking at long-term options. So this is January 21, 2022. Okay, so you can buy options on. Let's see, the bid and the offer. Okay, so that's maybe a little too far out because it's $11. Around 11 to 11.50 maybe. So you go June 18, 2021. The calls are still pretty pricey, but they're basically $9.60. So for $9.60 per share, you could buy options at $23 all the way up until June 18th, 2021. So you might even, value-wise, you might even go to all the way to 2022 because it's not much more to get the extra time. So you could buy that for $11. So per share, we buy them for $11 instead of $23, which is around where it was for the stock. And obviously, our hope is by January 2022, the stock has recovered and it's somewhere in the 90s, right? So my risk now is $11, $11.40, $11.35 per share instead of the 23. Now, obviously, this option has to go above 11 bucks it has to go to, if it's at 20, it's around 23. So if it goes to 33, say 35, that's nearly where my break even is. I need it to be above, 30, 35 and up. I would make money. Okay. So I was just going through the process of if I was, looking at that particular stock, if I was looking at that particular stock and I'm trying to figure out, so it's a bull market, so I want to look at upward momentum, uh, and I'm looking at this particular one. It's going sideways to down, so I could do a covered call on it, or maybe something long term, hoping that they're gonna recover. So this is the kind of the process that I look at. Um, I tend to lean towards neutral trades, so a covered call is more appealing to me, or a spread trade is more appealing to me than the long term purchase of the options. So, the less I'm owning that stock, the less, you know, um, connected I am directly to the stock, the better for me. So options are the preferred, direction for me. So, um, instead of buying the stock, I would rather do some sort of option, pure option or option stock type of trade than buying the stock on its own. Okay, because in my experience of trading, when you're buying stocks, buying and selling stocks, you're maybe 50-50, and then it becomes trade management. It really the money in the stock market, in my view, is the trade management part. Without trade management, the stock market doesn't pay you very much, um, you know, because you're not doing anything special. Just buying something and holding on to it. Yep, over time it'll go up, but the likelihood of making money long term on it, the longer you hold it, the less likely you'll benefit from that. At some point, you have to decide when to sell it. You have to have a plan of when and where. So, with companies that don't pay, which the airlines pay dividends, so you could make money on the dividends, but the dividends, are relatively small. The dividends will be coming down, obviously, for these guys, um, and it'll be difficult for them to pay it out. So I think that, again, the lesson here to share is, first, what's the market doing? Is it bullish or bearish? Okay, let me look at the stocks that are interesting to me and what they're doing, and then what kind of trade do I put onto it? That's kind of the process. I would look at. Any questions about that? If you didn't understand everything I just said, don't worry about it. It's still new to you, but that's really the process that I follow. And you're welcome, obviously, to try different ways of doing it. I can tell you that without some sort of structure, it's extremely difficult to be profitable in the market. It's not very kind to um, passive investors. It's not very kind to people who don't know exactly, have a plan or system to apply to. It's pretty savage. It'll take whatever you got. So it's important to have a system or a plan, or not to trade at all. It's you're dealing with so many variables, and you have to be on top of it. That's why the system is there, to avoid any emotional or minimize the emotional impact of you getting in the way of your training. Okay. Any other stocks you want to look at? Anybody? Okay. Okay. So that's okay. We can save. It's tough when you don't know exactly what you're looking at or what it's about. What we can do is we can shorten the call tonight if you don't have any questions, and we could just go to our training next week, or sorry, Wednesday, and get things going from there. Okay. Based on the formula you gave us last week, I tried to use the Bank of America as an example. Based on the upward trend, I concluded that the Bank of America would be in an upward trend today, but that was not the case. Okay, so let's look at that. Okay, so okay, so looking at Bank of America, There's one swing, yes. Everybody see that? That's one swing. That's the second swing, yes. Everybody see that? So that's one swing. That's two swings, right? Which is similar to what we were looking at. Okay. So typically in a swing trade, based on what we were doing, you'd wait for the pullback, and then you would have been somewhere in here with your trade, somewhere in here. So your stop would have been down here, below this red candle, and your target would have been the average move from here to here, here to here, averaged. So it's probably somewhere around, there. Okay, is where I'd be looking, somewhere around there. So I'd be somewhere. I'd assume that it would be, say, $28. Okay, so we'd still be in this trade if we got in after the second swing. This is not another swing that you wouldn't go on this swing. You see what I'm saying? So this is one swing, this is two swings. If you were looking for a third swing, you'd need what? You'd need a higher high and a higher low. Now, did you get a higher low? You did get a higher low, but you didn't get the higher high. You see, it didn't go up here. It would need to go up here and then pull back, and then somewhere around here you would take it. Does that make sense? So you came in, if you're trying to get into this trade, where it wouldn't have made sense, right? Because the one swing's there, the two swings there. If you didn't get in here, you'd have to wait till it came back up here and down before you entered again. So it hasn't done it yet. So the setup's not there for you to come in. Now you could wait till it goes to the third one. You could see what happens and wait till it goes up here and then pulls back. But this area here is not anywhere you would be trading. It would have been here. Somewhere in this area is where you would have been trading. So you would have, so we got lower low, sorry, there's a low, then a higher low, then we got a high, and then we got a higher high. Okay, so this would have been a nice setup. We would have waited for the pullback down into here somewhere, right? Now, what could have happened? We could have been in here. We could have been in here and stopped out. If we weren't under this candle here, it could have been, we thought we had it, and then boom, it went right through it. That could have happened. But that's going to happen. You're not going to be profitable on every trade. In fact, you don't need to be profitable on every trade. Let me explain. Okay, so if we look at an example, if I have 10 trades, so I have 1, 2, 3, 4, 5, and I have 6, 7, 8, 9, 10 trades. Okay. Now, if I was using a 2-to-1 ratio, so I make $2 every time I risk one, okay? Okay, so let's say on my first trade, I lose $1, okay? On my second trade, I make $2. On my third trade, I lose $1, I lose $1 again, I lose $1 again. This one, I make $2. This one, I make $2. Then I lose $1, and then I make $2. Okay, so if I looked at my winning percentage, what would be my winning percentage? Well, I got one there, one there, one there, one there. So I had 4 wins and 6 losses. So my winning percentage would be only 40%. Yes? Everybody see that? So my win percentage would only be 40% because I would only write 4 times. Everybody see that? Okay. But if I add up my losses and my winners, 1, 2, 3, 4, 5, 6. So I lost $6. How much did I make? 2, 4, 6, 8. I made $8. So what did I net? $2. You see that? Everybody see that? So you don't have to have a winning percentage. Your system doesn't have to have a higher win percentage. In fact, I'll show you a system in the next couple weeks. I don't want to show it to you too early. But in the next couple weeks, I'll show you a system that's right 90% of the time. It's right 90% of the time. But that one time it's wrong, it's going to take out 30% of your winnings, your income from that trade. So even though it's right 9 times, the 9 times that it's right produces a small return. The one time that you're wrong is going to take out a good chunk of what you made. But overall, you should make money. Okay? So You want to trade small and trade often. So if we look, a couple things you can keep in mind, okay? So number one, market, okay? So what does that mean? Is it bullish, bull, or bear? Okay, okay. Then we look at the stock, and we're looking for bullish stocks, and then three, type of trade, right? Okay, and then four, I'm going to add trade small. 5, trade often. Okay, so there's some structure already. We're starting to build some structure. So I want to know if it's a bullish or bearish market. Then I'm going to look for stocks that are in that realm, and then I'm going to put a type of trade based on what I'm looking at. And I want to trade small and I want to trade often. So I want the system to have a chance to play out the probabilities. If it doesn't play out the probabilities, I can't put too much into one trade. Even though I think if I just this trade's such a great trade, I'll make so much money. You got to understand it cuts both ways, right? So you want to trade small, follow the system, let the probability play its, whatever system you're using, whether it's a 90% success rate or maybe you're a 40% success rate. But the system played out over time is going to make you money, just like the roulette wheel. This is key. So the roulette wheel, doesn't matter who holds the roulette wheel. The roulette wheel is geared and set up to win. So if I give you the roulette wheel, you're going to make money just like casino does. That being said, if you get the roulette wheel and you mismanage the system, you're going to lose money. So you have to manage the system. It has to be managed properly. This is why casinos go bankrupt, right? They're mismanaged. So even a good system mismanaged is going to lose you money. So you can see all the elements that are required to be successful in trading. The good news is practice makes, makes perfect, right? And practicing the right way makes perfect, right? Practice in itself makes habit, right? So if we practice a system, it'll produce a habit, and it'll become much easier for us to be objective and trade that system. You have to let the system, you have to let the probabilities play out. If you put too much money, and just as a, you can add to that, number 6, no trade should exceed 2% of the account. 2% represents the loss, right? Okay, the loss should never be more than 2% of your account. So in a single trade, okay? So if you had a $10,000 account, how much could you? What's 2% of 10,000? What's 2% of 10,000? Anybody? 2% of 10,000 equals $200. So no trade should have a loss greater than $200. Everybody understand? No trade should cost you more than $200 in loss. Now, if you stick to that, it would take you a long time to wipe out your account. A long time. But if you're trading and you're risking 30% of your account, you can wipe yourself out in 3 trades. So 2%, it's actually harder to wipe out the account, because if you lose 2%, it's not even 200 next time. It's like 190, 195, and then it goes down to 190. So it'll keep going down on what you're risking. So you need to stick to these rules to avoid the emotions that can be stirred up through the stock market. What you really love is to put on your trades and just not look at it. Not worry about it, because you know what your risk is, you know what your plan is. So you just let the market do what it does, and some days you'll make money, and some days, some trades you won't. But overall, over time, you're going to make money. Does that make sense to everybody? Good, 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 good. All right. Any questions before we wrap up? We got a couple more minutes. Okay. If you're good, type in yes or Y, and we'll wrap up the meeting. And I will see you all on Wednesday at 8 o'clock. Bring a notepad and pen or your laptop or something to take notes, okay? Take advantage of this time. We're going to continue to learn about the market. If you have any questions, write them down. Please, I hope that you've done your homework and tried that out. We're going to go through that example that we created last Wednesday to talk about, what the results are and how we can apply that, okay? What I really want you to do is learn and understand that there's a system that you can follow, that you don't need a ton of information about the market or the depths of these stocks and what they do. And you don't need that. You need a system that's going to make the decisions for you. You just need to apply it, just like a casino. And over time, you should be profitable. All right, folks, have a great rest of the week. I will see you in a couple days on Wednesday. And if you have any questions, reach out.